All right, hello everyone. Here for trivia. I do not have the energy of Fridge, but that's good. We're going to start with trivia here. Most of you have participated, so you know how it works. These are all questions related to options because Fridge decided he helped me create questions. He did half of them, but he decided that since I was hosting by myself, we should do options related only. So, no economic data questions this week, but I'd say the questions that Fridge added, not too crazy. But next time we'll do it. Sorry to hear that, Hannah. Well, we'll get started here. If everyone's ready. Someone left again, but it's fine. Whatever. It's Rock. Yeah, Rock, you're not in here, I don't think. Okay, there we go. All right. You ready to roll, everyone? Okay. Let's get started. I do not want this full screen. All right, financial tip for week 4. 3, 2, 1. Here we go. It is best to blank options in high IV and blank options in low IV. I didn't shuffle these. So, yeah, pick which one works. Yeah, it's great that your child's playing as long as they know what to do with implied volatility and options. Doesn't look like they do now. All right. Good job. That was a tough one, guys. Not really. Folks. People. So we'll continue. I'm going to guess that Hannah's child did not get it. Right. So, all right. It's zoomed in now. Can no one see? Did I mess it up? Okay. Well, we're gonna roll with it. I've never hosted here. Okay, we're all good. All right, let's do next one. And to explain that, maybe I should explain it. I mean, you all got it right, but we all know we want to sell in high IV because premium's higher, and we're hoping for volatility to contract, so that benefits our selling position. And you want to buy in low IV because IV will expand likely, so you're able to benefit from that expansion, and the premium's lower, so it's a good time to pay a debit. I'm waiting for you guys to type here. It doesn't show the question? The hell? Would that work to buy from, say, a month of earnings for IV increase close to expiration? Yeah, so Bread Boy, you could technically, I don't know if I'd recommend this, but you could technically buy a month out, allow IV to expand, and then right before earnings, assuming you're directionally favorable, you could close it out for that IV expansion and don't even have to worry about the earnings result. And then alternatively, if you were to sell, you'd wait until about the week of or day before earnings, and you would sell and then hope for the IV crush, which would benefit your position. Okay, but is this different than when Fridge does it? No. Okay, good. Because I all I can see is the thing. I've never. All right, we'll keep it going. I did read your comment. I read your comment. It's for teachers, so it's supposed to be on the whiteboard. Hey, I read, man. It had the answers on the squares last time. Okay. Well, we'll keep it going. Bread Boy, who is Itai. I don't know. You guys are confused. Okay. All right. Let's do it. We'll do the next one, everyone. Ready to roll. Baidu is at 35.95. The 23 put strike at 23 delta put at a strike of 120 is a premium of 395. What is the extrinsic value of this option? So Baidu is at 135.95. The 23 delta put at a strike of 120 has a premium of $3.95. What is the extrinsic value of that premium? Yes. So that was a lot of math, maybe potentially, but the problem was that there was no math, right? So this put is out of the money because it is a 23 delta. And if the price of Baidu is 135.95 and the strike is 120, that means that the put is out of the money. And when you are trading out of the money options, the premium is entirely extrinsic value. Yeah, you got to make it confusing. Well, spoiler alert, there's another one coming. And maybe it's about intrinsic value. Yes. I did do tutoring in college, so you know. So, okay, we got Tyler bumping up Itai because Itai couldn't focus. That's okay. We'll do another one. Very similar, and it's related to intrinsic value because I did not shuffle these. So, Baidu is at 135.95. The 76 delta call at a strike of 120 has a premium of 20.75. What is the intrinsic value of this option? So Baidu is 135.95, 76 delta call at a strike of 120, and the premium is 20.75. What is the intrinsic value? So no one got it right, which is not a good sign for me, but the answer is 15.95. Now, I do hear you, Tyler. It is math, but I thought it would be easy. So, yes, the answer is 15.95 because you take the price, it is an in the money option. And so, the in the money option, there's intrinsic and extrinsic value. The intrinsic value is the price of Baidu minus the strike. So, 135.95 minus 120 is equal to 15.95. So, green, good. I'm dying. Yeah, so it's not zero. But yeah, so that is the answer, 15.95, because 135.95 minus 120 is 15.95. And so the extrinsic value of this option is like what, 480? Doing math real quick. Yeah, 480. But, you know, yeah, see, that's why I threw it in there. Maybe I shouldn't have thrown that 1520, but it was math, but I thought it'd be hopefully quick math. But I understand I am a math person, so this is easy math for me. Might not be easy math for everyone, and I understand that. All right. But obviously, I didn't do a great job if no one got it right. So that's on me. It's on me. If the whole class flunks, it's on the teacher, you know? All right, here we go. Number four. Selling cash secured puts until assignment, selling covered calls on those shares until assignment. This strategy is called double income strategy, the square, the rhombus, or the wheel. Okay, who put the rhombus? Who honestly picked the rhombus? So it's the double income strategy was a little misleading because it actually the wheel is called a triple income strategy, so I threw that in there to be kind of confusing. The rhombus was in there as a hope no one would pick it, and the square also the same thing. Yeah, so I don't know who picked the rhombus, but it's not the rhombus. It is called the wheel. One second. Well, the answer is the wheel. So yeah, you were close, Bread Boy. The reason double income's not right is it's actually a triple income strategy. And then, hey, hot take, I don't like the wheel. So that's just me, and that's okay. Um, anyways, yes, Androids can do split screen, depending on the apps, Rock, but you probably don't have, you're probably an Apple fanboy. Just gonna have a hunch, as most people are. Anyways, let's look at this weird board. Hey, nothing wrong with the wheel. Okay, if you guys want to use it. Not my favorite. There are better things you can do. Hey, Stratcat. Hey, Stratcat, you might not get second this week. You want a short Apple? Yeah, well, I kind of did and did not work out for me, I'll be honest with you, but that was a panic. Only for money. Hey, there's nothing wrong with trading Apple. That doesn't mean you want to use their products, okay? You know, I trade so many things. Want to know why? Because I don't really care what they do. If you have bias, it's going to ruin it. It is nice though to buy companies that I like. I will say, using the rhombus strat. I always use the rhombus. Throwing a rhombus with a reverse jade lizard. Oof, you got this, man. I do somewhat care fundamentally. I mean, I'm not going to like, yeah, you saw, like I did Bitfarm, but I put a small amount of money in and was like, you know what, whatever. All right, let's do the next one. Although it is more expensive, which is not a benefit of buying in the money options. And Hannah's right. I'll do a post on the rhombus, the new option strategy, the rhombus. But for now, we'll focus on, although it is more expensive, which is not a benefit of buying in the money options. It's okay. We need Stratcat to win. He's been second every week. Greater leverage. So yes. So in the money options have a higher probability of profit because it's a higher delta, so that's a higher probability of profit. There, when it's in the money, there's extrinsic value as opposed to no intrinsic value if it is out of the money. Your break even's lower usually because of the intrinsic value, but with an out of the money option, you have greater leverage because you can spend less money, and if things go your way, you do get a higher return. So, um, so 3 of 5 of you were correct. And one person's just not answering. I'm gonna guess that's Hannah. Excuse me, Hannah's daughter. No, never mind. I have no idea what I'm talking about. It's probably Bread Boy. No, Bread Boy's answering. It's probably Rock. It's Rock. Anyways, nice job. All right, let's keep it going. Hey, you know, take it easy on yourself there, Itai. It's okay. We're learning. We're having fun. All right, let's do the next one. Which is not a benefit of spreads? Not a benefit. Not a benefit. Do, 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 do. Just have Jeopardy music going. Easy to understand is not a benefit. You know, I didn't love. I threw this. This is my question. I threw this in there just because it was a good. I really wanted to demonstrate the benefit of spreads. Easy to understand. It takes a little bit of time, but they're not that hard to understand, really. Um, you really don't have to spend much time to figure them out. I didn't really have a good not answer there. But Itai, please don't tell me you put can be profitable in a sideways market then. Because that answer is certainly true. Unless that was just someone. Okay, who put can be profitable in a sideways market? Do I need to explain that away? Do I need to explain that one for you all? Oh, and hey, you guys want to know? There's my cars there. There you go, Itai. Wasn't lying. Anyways, profitable sideways market. Who put that? Who put that? Don't tell me you put that, Itai. Does that mean you did? Okay. Do I need to explain I know it's late for you. Do I need to explain? Do I need to explain that, or do you just want to blame that you're tired on there? Yes, you're right, Tyler. Most have not traded spreads, so it's in there to kind of demonstrate why spreads are beneficial. Because although they are kind of confusing, they are good. I really enjoy spreads, as you all know, because that's pretty much all I do. Other than, I do naked puts and stuff too. All right, that's what happens when you're a parent, there, Hannah. Spreading cheeks, Hey, that was good timing on Hannah's response there. All right, Stratcat in the lead, doing well. All right, here we go. Number 7. On a margin account, trading which of the following would not trigger pattern day trader rules? MCL, SPY, Gold, SPX. Which one would not trigger PDT rules? PDT. Okay. Okay, something is wrong with you all today. I'm just joking. I'm just joking. I don't mean to, I'm not trying to shame anyone. Um, so, I'm just joking around, everyone. MCL is micro crude oil. That is a futures. So if you trade futures, any futures or forex, futures or forex are not subject to pattern day trading rules. So that is why that is the answer. Gold still subject to pattern day trading rules. SPX still subject to pattern day trading rules. But yes, StratCat, doesn't matter if you're margin or cash. If you trade futures or options on futures, no pattern day trading rules. So you can day trade SES or MES and there's no problem. And then obviously if you want to use Forex, it's the same thing. Bread Boy, to answer your question, and sorry everyone, I was not trying to shame anyone. I was honestly just surprised because I felt like the backslash MCL gave it away. That's the only reason. I thought the backslash was going to give it away. PDT rules, they only matter, Bread Boy, from the point of that you get flagged as a PDT trader. So let's say it's Robinhood. If you're in Robinhood and you get flagged as PDT, even if you're over 25K, you miss out on like some of their benefits. Like they won't give you the 4% cash sweep and they'll get rid of some things. I don't really know, Stratcat, what that backslash or forward slash, I can't remember what it's called, but it really is just a way that they add annotate or denote what a futures contract is. So you'll see a lot of time like /ES, /MES. Yeah, so it's just a way that but yes. Now, Stratcat, of course, if you want to trade futures, we got to be smart about it. I prefer options on futures. Everyone in here will kind of say, you shouldn't trade futures with your own money. I think you can. I don't think it's smart to just jump in. I think you can, but you really want to use micros. You do not want to use, especially to start. Hannah's got the highest answer streak. Futures are powerful. And then there's a thing called span margin. So you get good rates, buying power rates when you trade options on futures. Hey, there you go. There you go, Bread Boy, $25. Micros are the way to do it because your risk is super low. Now, there's a margin behind it, but hey, $25. Think about it. If you're using the regular account, times that by 10, that's $250. Better than being down full board GC. Hey, if you full ported GC a freaking week ago or 2 weeks ago, you would be great. I have a GC trade that has, I'm going to be taking a nice loss on this GC trade. Wanted it, I was bullish, but not bullish enough. Anywho, Well, your dentist is smart. I own some GLD, to be fair. I bought GLD at like 306, so I'm pretty happy with that. And I've just been sitting on it, and then I do some stuff with it, like an MLM. All right. Well, people are loving gold right now. All right. I'm going to let you all type here before I click the next one because I don't want to. I'm just getting a little carried away. Have you never heard that? I'm going to guess your daughter has heard that from someone. That's my guess. Let's see what Stratcat has to say, and then I will keep us going. I don't want to interrupt. I had covered calls on gold that I forgot about and were assigned this week. I feel why Ryan don't like the whale. Yes. And let's say when that's I wanted to open up stuff with my GLD shares, not it would be my call side would be covered with my shares, but I kind of hesitated. I'm glad I did because I would have been managing that a lot because I would rather not the shares get called away. So, anyways, we'll move on. But to be fair, Stretcat, it's not that I don't love the wheel. Well, that's why I don't like covered calls, but that's why I like to do spreads with covered, my call side covered. Like I like a covered strangle. It's very flexible. I like a covered call ratio, very flexible. Covered reverse jade lizard, relatively flexible, but I prefer the covered strangle. It's just way more flexible. Anyways, we can continue. When buying shares outright, what is your probability of profit? Would it be? Would it be? Not trying to. Okay. Okay. Yeah, 110%. Etai, please don't tell me you put 20%. Yes. Well, there you go, Tyler. That's the way to do it. Okay, someone put 20. So whoever put 20, it's okay. I'm not going to judge you. But yes, when you buy shares, your probability of profit is 50% because it's 50-50. I almost picked 20, but couldn't reconnect in time. No one has to admit that they put 20. When I buy anything, the probability is 20. Well, hey, come on, Stratcat. Let's get a little more positive attitude there. You got to at least have a 50% when you're buying shares. But yes, when you're buying shares, it's 50-50 because it's either going to profit or it's not. Now, to be fair, if you look at a historical graph of the market from the beginning of time, it goes this way. So, if you buy and hold and you're patient, yes, there's going to be dips, but overall, the trend goes like this. So, and yes, companies can go bankrupt. You are correct, Etai. It goes backwards in time. Your cam is reversed. Okay, is it that way? I don't know. I was realizing when I was doing it that I was maybe having it. Yeah, well, now I can't. Intel might be fine for now. But yeah, of course, there's companies that will go to zero. You are correct, Etai. But I would say you're assuming you pick a reputable company that you want to buy shares in. You're more likely. It's probably the profit's still, yeah, VOO and chill, or hey, we all have Stratcat. I mean, I owned Seadrill. No one knows what the heck I'm talking about. So, yeah, Seadrill, oil company, went bankrupt. Seadrill, SEA. Ooh, 200 at the top. All right, let's keep it going. Number 9. Which ticker is not related to crypto? Not. NO. All right. You all got it wrong. Now, see, I threw in GDLC because I figured no one would know. I figured no one would know what GDLC was. Now, dogs I made up. I'll be honest. I made that one up. Obviously, you guys were good. You knew IBIT. I threw in crypto because I haven't been doing it. So, Nope, dogs. That's why I created dogs, because I was like, you know what, I'm gonna throw dogs. I was trying to look for a new ticker to kind of make it, but yeah, dogs is the one that I made up. IBIT is the Bitcoin ETF. Souls is the Solana ETF, and then GDLC is the new like diversified crypto ETF that Michael posted on After Hour. It's like Bitcoin, Ethereum, Solana, Cardano, I don't know, and then one other, maybe Litecoin, yeah, whatever. So, anyways, what can I say? What can I say? I'm just waiting for that fart coin ETF to come out, but it will eventually. I was also going to throw the XRP one because there was an XRP one that just came out, but I decided not to. Nope. See, that's why I used dogs, because I was like, people are going to think this is Dogecoin. But nope. Not real. Maybe that's a bad question, though, if none of you can answer. Let's be honest. But hey, I guess I created a good name there. Yeah, dogs. So don't try to trade dogs. It's not real. Dogs is not real. All right, let's get number 10. Dogging me. All right, number 10. What does the term strike price refer to in an option contract? Strike price. Now we're getting into Fridge's questions, so that's the difficulty. Well, wow. Yeah, Breadboy is saying that I hope the difficulty doesn't increase. I was going to say, I think it gets easier as we get into Fridge's questions. No offense, Fridge. So yes, the answer is the price at which the underlying asset can be bought or sold. Some of the questions are kind of hard. I will rephrase. But yeah, you're all right. Your strike is just basically what you're choosing to let. If you became to be exercised or assigned, that's the price you're going to pay to buy or pay to sell. Actual Breadboy in the lead. Choose the longest answer. I guess I shouldn't have told you all that it's Fridge's time. All right, here we go. Number 11. What does the acronym LEAP stand for in options trading? This one might be a little hard. These are funny. I didn't read them all. I just wanted to see if the answers were right when I looked at them earlier. This one's kind of hard, though. I will be honest, because I always have to look up what does LEAP actually stand for. Yes, long-term equity anticipation securities. I scold everyone for calling them LEAP. Yellow and blue. Yeah, so leveraged equity asset position strategy. I mean, these are all pretty convincing. Long enduring asset price securities. That one's kind of funny. Listed equity and profit shares. I mean, I could see why no one picked that one. To be fair, Stratcat, I mean, the yellow one's kind of long too. Bias in yellow because I buy out the money. Leveraged equity asset position strategy. Well, I hear you, but it's still a long-term equity anticipation strategy. Security. Here we go. Oh, Tyler jumping up. Jeez. S is part of the acronym. Tyler knows. Tyler knows. Hey, in a bull market, leaps are great. If it's not a bull market, they're not going to be great. But your leap puts could be good. All right. Here we go. Next one. Hey, it's not over yet, E-Type. We still got 9 more questions, man. Which U.S. exchange is known for pioneering listed options trading in 1973? I don't think anyone's going to be able to get this one. Although maybe some will. I know the answer. That's just because of Tasty Trade. That's the only reason why I know the answer. Oh, okay. Good job. I guess I didn't have faith. Is SIBO. I don't know if that's C. Yeah, it's SIBO. Amex is definitely not the answer. That's a credit card company. I don't know if anyone knows that. And then NASDAQ, yeah, I mean, I don't think they do anything with options, but SIBO, I think it's Chicago Board of something, I believe. It's a Chicago-based. Good job, Bread Boy. Yeah, C-Boy, SIBO. I think Stratcat actually knew it. Rock, I don't believe SIBOs where small penny stocks are traded. I don't think that's. I could be wrong. There you go. Well, SIBO's a good resource there, StratCat. Yes, they do have all the good info. And then they created futures. Is SIBO? I don't know what you're talking about with penny stocks. Let's look it up real quick. Real quick. You might be right. They're all subdivisions. Okay, well, whatever. SIBO. And handle trades, lot of different ones like Amex, ABAT, SIBO, etc. My bad. What I had in mind was OTC. Yeah, OTC. Over the counter is the penny stocks, which, I know you guys love your Meta Planet, but usually OTC is a red flag. Red flag, in my opinion. That's just me, though. Chicago Board Option Exchange. Over the counter is a lot of. Wasn't that in Wolf of Wall Street? Like how they just basically like trick people into buying. Yeah. So, I get people are into Meta Planet. You guys go for it. You guys do it. Do it. Do it. Do it. But do it smart. Do it smart. When you get delisted for not meeting requirements, the company invested in dumped to nothing and got transferred to OTC. Yeah, not a good sign. Pink over blue. All right, next one. A protective put strategy involves protective put strategy. Protective put. Protective put. I guess Fridge's questions are a little harder than I thought, maybe. Well, maybe not. Yes. That is the right answer. So, Itai, yeah, shorting a stock and buying a call option would be more of a protective. I don't know what the name of that is, but yeah, you're protecting yourself because you're shorting the stock and then buying a call to protect yourself from a huge loss, right? Protective call. That was going to be my guess, but honestly, I didn't want to just throw that out there. A straddle? No, a straddle would be if you bought two strikes at the same. If bought a buy or sell a call and a put at the same strike. Straddle is call and put. Call and put. 4 a.m. your time. Yeah, I would. I mean, I'm up sometimes at 4 a.m. my time, but I don't think I could get on the computer and be coherent. Be somewhat coherent. Well, yeah, I don't, and I'm also not up at 2 a.m. either, Etai. So that's just me. All right, let's see where we're at. Stratcat. This is a leaderboard. It's going all over the place. It's a very competitive leaderboard this time. All right, here we go. Let's wait for Rock. Yeah, Etai is dedicated for sure. All right. 14. Which of the following is not an option spread strategy? Not. 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 There you go. Head and shoulders. Yep. So a butterfly, I would hope Etai didn't answer that one, but if he did, he did. Butterfly is an option spread strategy. Head and shoulders, as you all know, and I don't know, is some sort of technical analysis thing that I don't know about, but something on the chart that you guys look at and you're like, whoa, cool. So, I would think Etai would know that one, but Head and Shoulders is also a shampoo company. Yes. I said butterfly. Yes. So Bread Boy Butterfly, a butterfly is a spread strategy. It's there's a couple ways to do it, but it's okay that you didn't know that. You don't trade spreads. So how would you know? But now you're learning. Okay, we got Stratcat still in the lead. Number 15, but he knows Head and Shoulders. Yeah, I would figure he would know Head and Shoulders. But sometimes it's 20 seconds. I mean, I know why we do 20 seconds, but it makes you kind of panic. So, silly boy. Knees and toes. All right, here we go. What does assignment mean for an option seller? What does assignment mean for an option seller? Well, that was a hard one. I'm glad everyone got that one right. So, yes, being obligated to fulfill the option contract terms. That is what assignment means for the sell side. Now, of course, exercise would be the buy side, right? And Stratcat's still in the lead, but barely. You got Swing and Mr. Galaxy and actual Bread Boy all in the 7K area here. We'll see. We'll see. Next one. Which option strategy profits from a sharp move in either direction? Sharp move in either direction. Which one profits? Which one profits? Which of these? Which of these? Which of these? All right, good job. Long straddle is the answer, Rock. Yeah, long straddle. So long straddle is you're buying two right in the middle. Usually it's at the money. You're buying a, let's just say it's $100 stock. You're buying 100 strike call and 100 strike put, and you're hoping for movement either way. If you're selling, it's a bit different, but yes, short strangle should have. But this was a fridge question. If I had this, I would have made it a little more confusing. But that's just because it's me. Because yeah, short string or even short straddle, like I would have put a lot of, but then again, long might have been the giveaway on that one. Uh, Short strangle is kind of like an iron condor. The difference is that in an iron condor, you're defining your risk because you're buying those wings as they call it. So short strangle is naked usually, no protection. Your risk is undefined. Bread boy, to my here you go, man. Here you go. Here's not quite a book, but there is a resource there for you. They talk about implied volatility, IV crush, but there's a whole bunch on there. Um, yeah, no problem. I use this all the time. It's got a lot of helpful information. Tasty Live, Tasty Trade, great resource. I know pretty much everything I know because of Tasty Trade. Tasty Live. Is my answer cool, Leo Kenshin? Oh, thank you, man. I've taken pictures on it on after hour, but yep, those are my cars there. Thanks, Rock. All right, 17. Which option's Greek represents the acceleration of delta? Acceleration of delta. It's so weird with the camera up here. I'm looking over here. I don't know. Gamma is the answer. So theta is time decay. Gamma is the rate at which delta will change as your options contract increases or as the underlying increases or decreases. So, um, if you have a gamma of, I'd have to look at 2 or 0.2 or whatever it is, then that means that for every dollar move, your delta is going to change by 2 or 0.2. I have to look at it to remember, but, and yeah, rho is somewhat relevant. You are right. Although rho is usually not relevant. That was something that we just dealt with, as we all know, with rate cuts happening on Wednesday. Very exciting. And more rate cuts to come, potentially, more likely. All right, we got Stratcat with Mr. Galaxy just behind and Hannah 1K behind, but that's pretty quick. And same with actual Bread Boy. You guys got 3 questions left. Which of these is considered an advanced option strategy? Advanced. I'm gonna be honest with you. I don't know if Iron Condor is quite advanced, but more complicated than buying a call, buying a stock, and buying a put. So I get it. I'm gonna, yeah. I guess it requires level 3. Sure. If it was me, Rock, I would be throwing different stuff in there. I'll be honest with you, but you got denied from level 3. Well, depending on how much money you have in your account, if you're using Robinhood, they'll deny you flat out. But yeah, Hannah's right. It requires level 3, so it's a little bit harder. And then, yeah, if your broker won't let you, so he DM'd me to do it. Vertical spread should be level 2. Yeah, I think there's some spread. Honestly, level 3 options shouldn't be so gate guarded. It's they're. I think it's because of early assignment risk. Or let's say you did a vertical spread and you got assigned early, then that causes a problem. But yeah, Bread Boy, like Mixture Galaxy just said, if you contact support, they'll give you a question. If you know if you know your stuff like relatively, it should be pretty easy. Tyler's right. I tried to do it when I first started trading options, not knowing anything, and I did not pass. But it's pretty simple. Or if you want, you can switch to Tasty Trade using my referral link and kind of just answer a couple questions, and then you get level 4 options trading if you want. But they are a very unrestricted broker. But highly recommend. Highly recommend. I highly recommend. I enjoy them. Tasty just gave it to me. Pretend like you have lots of money and want mask risk. Exactly. I mean, it doesn't mean. I was gonna say lie, but it's not really lie. It's just kind of. I also, I don't know. Just be fair. Yeah, I mean, for Tasty Trade, for me, I've unlocked everything. I'm level 4. I'll trade options. I have portfolio margin, all that. Level 5 market maker. I don't know, Hannah, to be honest with you. Kyle's mom. The next one. It's not lying. It's aspirational. There you go. I think it's a matter of basically maybe stretching the truth, but then not doing it and going balls to the wall. Like, okay, now I'm gonna go sell naked calls on Oklo. You just need to, yeah, do it and then be smart about it. Still StratCat in the lead. Looking good, StratCat. Looking good. Hey, you can love Oklo. That's okay. If you had a short strangle or a naked call on, though, you'd be sweating right now. Let me tell you. Anyways, next. There's the volatility is high, so people are. Yeah, there you go. Volatility is high, so people are trying to do some short strategies, and it's a bust you don't want to step in front of. What is the break-even point for a long call option? Break-even point for a long call option. Blue is correct there. So Tyler, you must have done the minus. If you're selling, it is strike price stock. No, it's not. It's never stock price minus strike. It's strike price minus premium if you're selling. It's okay. Don't worry about it, Tyler. Well, it could be minus or plus. For a short call, it's plus, I guess. For a short put, it's minus. Anyways, strike price plus premium is your break-even point because you have to worry about the strike price, and then the premium adds to that strike, right? And then, yeah. All right. Let's do it. Last one, everyone. Let's see. Where are we at? Where are we at? Okay. Well, Mr. Galaxy and Hannah, you guys are tied in second. And Bread Boy, you guys have a chance. You all have a chance. So you're saying there's a chance, So we'll see. The heat is on. Yes, the heat is somewhat on. I think we know what the winner's going to be, but you never know. You never know. Who knows? That last question could just throw you StratCat, and then there's no hope. People love just jumping in here and leaving right away. And several people coming in and leaving. All right, last question, everyone. Let's do it. What is this GIF? GIF, whatever. Oh, it's Emma Stone. Eating ice cream, crying, probably on SNL. All right, here we go. Last question. Itai, I believe you are no chance. No chance for you. Here we go. Final question. A strangle differs from a straddle because strangle differs from a straddle because yes, the answer is the strike prices are different. Yeah, Rock, you're right. Child in Africa could really benefit from that. Whoever named them should be strangled. It's kind of a weird name, but I mean, it makes sense because you're trying to strangle the price and then you're trying to straddle the price. So the strike prices are different. So yeah, short strangle, you're trying to keep well, it doesn't matter if it's short or long, but you're buying two, let's say it's $100 strike price, you're buying an $80 put or selling, and then buying or selling a $120 strike. Call, you're trying to keep them in between if you're selling. If you're buying, you're hoping for them to go outside of that. Straddle, you're buying the same strike. And either it's going to go, if you're buying, you're going like this. If you're selling, you're hoping for it to stay within your break evens. It is not the expiration dates are different because the expiration dates are the same. And the Greeks definitely do apply. In fact, if you are doing a short strangle or a short straddle, you try to keep them delta neutral. I feel like it's opposite. Same strike sounds like a strangle. I always miss it up. Oh, I get you. Well, to me, strangle to me means like you're strangle it between the two, you know? Like trying to hold it within the two. And then yeah, straddle to me is like I'm straddling a price, right? Like I'm literally straddling over a strike price. There we go. Stratcat won for the fourth time. He was second place for several weeks. He wins. Congratulations there, Stratcat. Stratcat. I don't know why I just said kek. What's the one with different expiration dates? What is the one with different expiration? Well, it depends on what we're talking about, Bread Boy. There's a call diagonal with different dates. There's a crab with different dates. Yeah, congrats, Stratcat. Closest yet. Right. Who won so far each week? I'll tell you in a second. There's me at the bottom left. LOL. I thought we were on week 3. I think this is week 4. But then again, I can only think of 2 other people who won. Good job, everyone. Good job, everyone. Let me just look real quick. Nope. Just a second. Let me see, Itai. I thought this was week 3, or I thought it was week. Yeah, Tran won week 1 for sure. And then last week was Hannah. Okay, yeah, this is week 3. Sorry, did I say Hannah? I meant Anne. So yeah, it was Train, then Anne, and then now Stratcat. And Stratcat's been second place. Uh-oh. You guys lose me? Can you hear me now? Yeah, Anne got second. Anne got it week 2. Anne is yeah, I'm sure I sound like a robot. Anne is a tray. This is Anne, Itai. Yeah, you're welcome. She knew her stuff. Good thing she didn't show up because she would have annihilated everyone here. But yeah, great job, Stratcat. I will DM you. We'll figure this out. But yeah,